Okay guys, let's commence. This is session number 2, which concerns entries, exits and holding the trades. Right guys, so please mute yourself. Okay, let me mute you guys. Let's mute ourselves. I will give you guys an opportunity to ask me questions after the end of the session. Okay, right. So, yeah. Guys, we already had a first session yesterday in which I discussed how to enter, exit and hold the trade. I'm showing you pure price action. Pure price action, guys. We will address add-on at a later stage, but in these entries I will be addressing Fibonacci retracements. Again guys, this week I've decided that our reference chart will be H4 for analysis purposes and entries will be on H1. Now guys, next week our reference chart will be H4 and our entries will be on 15 minutes time frame, guys. And the following week, the third week, the reference chart will be H4 and entry will be on H1. So you will be trading a chart where potentially you have a trade of, let's say, 110, 20 pips, right? Potential trade H4, right? But your stop loss will be based on an entry on H5 or 5 minutes time frame or 15 minutes, which is literally 25, 30 pips, right? So I'm trying to improve your risk and reward, guys, but that's objective is. I've decided I'm finishing the training. I'm not teaching anymore. I'm finishing the training normally. So my objective is to whoever I had trained become a successful trader. Guys, more than 86% people who I have trained in last 6 months, right? The traders online, and normally most of the traders are from banks and institutions or working in other departments who approached me, guys. Everybody can trade successfully. Everyone is making the bloody pips. So I'm very satisfied, guys. I'm very satisfied as far as my performance is concerned as an instructor. I think I did the job well. It's a satisfaction. I meet your expectations. That's what I believe. But again, I'm having these sessions because I'm trading for the next 3 to 4 weeks. I'm flipping accounts actually, guys. I'm telling you something. I've been flipping accounts from last week since the market started. I'm flipping accounts, guys, for some reason. Hence, I'm trading. I'm sitting on computers a lot. Therefore, I've decided to give you guys my time so that you guys can attend the lectures and trainings from me. Please use this training and this is the only training you need, guys. Forget if you're following other instructors. Please forget it, right? The reason is you just need to follow one person, right? If you don't believe in my teaching, just leave this room and follow others. And if you believe in my teaching, right, just follow my instructions. Do not listen to others. The reason is you can manipulate yourself. It's hard for you to become a professional, successful trader. You need to listen to one person, guys. And I can tell you, not because I want to be some big shit or what. I don't even have an online website, guys. I decided at a stage, let's open up, but then find a contract, right? So I didn't need it for. I didn't even open up any groups. It's not worth my time again, right, guys? We are not online traders. My Facebook is pretty new. Again, guys, I'm saying this so you have the trust and faith in me, guys. I am one of the best traders around. So you need to listen to me. That's all I have to say. I'm saying this so you guys have the trust in me. You're not wasting the time here. Makes sense, guys? So please, precisely, and I'm going to be very precise in my entries and exits and holding the trade, which normally other traders never discuss. And please, you precisely have to take a trade like this, guys. Exactly have to take a trade like this. If you do this exercise the way I'm teaching you guys, you will become a profitable trader. So please, I say it again, please listen to what I say. That's all I have to say. Guys, make sense? If it does, please confirm by saying yes, writing yes. Okay, great. Okay, guys, let's start. Let's start with, I'm gonna show you examples of, again, entries and exits, right? And guys, it doesn't matter. What matters is that you precisely take a trade the way I'm teaching you. So first of all, you have to do your markups. weekly zones, right? Daily point of reactions and failures, and then go to H4. So H4 is the time frame that we are doing our analysis on, right? And if we see a potential and possible trading setup, then we will be trading this and our entry will be on H1. Now that is the plan here. Okay guys, so I'm on H4 on EJ right now. I'm going to show you exactly a buy trade on EJ, guys. And I'm going to use Fibonacci retracement, which I'm sure even you haven't learned from me yet, most of you. You still know what Fibonacci retracement is. Pretty simple, guys, right? So I'm going to show you guys two trading opportunities. The first, this long trade, and then this short trade, guys. Okay, so everybody understand what I've been saying and what I've said so far? So before you take a trade, you should have done your markups on H4, which will be pretty much like this, guys. Make sense? Right, guys? It makes sense? Okay, great. So these should be your zones, point of reactions. You should have marked them. I'm marking them not professionally, but I'm just showing you guys. You should have marked them. So you guys should know precisely, because you finished lecture 1, that what I just did, right? Everybody understand what I just did? Okay, guys, you go to H1. H4. Now we are on H4, guys. I'm going to show you the buy trade that I'm going to take, right? Now price is in this descending channel, that you have this channel marked up, and let's say the price was here. So guys, the price was here when we're starting this, right? And I'm going to take a buy trade. So I'm not showing you to how I'm going to take a sell trade. I'm going to show you precisely how did I took a buy trade. Okay, guys, make sense? So I'm going to start following the price from this level, guys. Make sense? Everybody understands, right? Guys, look, wait for the setup, right? Do not rush. H4, just open 5 trades, 5 pairs. You need 100 pips. 5 pairs, you need 100 pips, 3, 4 trades. That is it. 2 trades, that is it. 100 pips. Sometimes just 1 trade, right? Enjoy the market. Enjoy the market. You don't have to keep on jumping into the market, right? Enjoy it. That's all I have to say. Again, objective is 100 pips, because you've got a bloody business plan which suggests by making 100 pips, you can make 237,000 pounds in a year by investing 2,000 pounds, right? So if you're earning more than this, I understand you're not following me, but if you're not earning more than that figure, then please respect what I'm teaching. Make sense? And value that 100 pips. That's important. Value that bloody 100 pips. Okay, guys, the price breaches this, right? Let's say I'm going to take a buy trade. See, I'm not showing you how I'm going to take a sell trade. I'm going to take a buy trade here. And remember, guys, this is literally live market analysis. The reason is I'm doing an analysis based on each candlestick. So I will do precise analysis on each candlestick even when the market is here right now. Make sense, guys? So I'm not selling EJ yet. And I'm not selling EJ yet because you need to see what's going on here. Make sense, guys? Okay, great. Let's see. So I've got this. What is this candlestick? I'm gonna, guys, it will be interactive session. Come on, what is this candlestick? Anyone? Engulfing, bearish engulfing. Should I buy on this candle? It's not a buy trade, it's buy or a sell trade. Okay, it's a sell trade. Yes, we are not selling here, so let's move on. What happened to the next candlestick? Should I buy on this candle? Whenever you see a candle, you need to ask 3 questions. Should I buy on this candlestick? Should I sell on this candlestick? Or should I, if I have a trade, should I close that trade? These are the 3 questions you need to consider. And be honest in responding and answering those questions, please. Okay, guys, what about this? Should I buy on this candlestick? Anyone? Who thinks should I buy on this candlestick? It's like a shooting star, guys. Okay, no one. Good. Next candlestick, guys, touch the support level, right? Which we already had marked up previously from here. Make sense? So guys, based on this, we mark the support level, right? Okay, great. Now, let's consider. So this is the first bearish candlestick which touched the support level. Yes? Make sense, guys? Guys, be with me on this. I'm going to go precise analysis on this. This is a very good example for you for the learning purposes. So this candlestick is what? What is the name of this candlestick? Anybody? What's the pattern is? Bearish engulfing. I don't want to see the engulfing. Pablo, I want to see bearish engulfing, right? Okay. It touched the support. Should I start buying here because it touched the support level and there's a small rejection, guys? Should I? Anybody who thinks it's not even aggressive entry, it's no entry, it's not even a bullish candlestick, it touched the support, but aggressive entry is when the first bullish candlestick touches at support or a first bearish candlestick forms at resistance. That is the aggressive entry. It's not even a bullish candlestick and we're touching the support. So guys, it doesn't even fall into the category where I'll suggest we will be buying this. Make sense? Does it make sense, everyone? Okay, guys, precisely you have to follow and trade the way I'm teaching. You will always be a profitable, bloody profitable trader. Come on. Okay, so I'm not going to buy on this, right? But my eyes are open now. The reason is we are at a substantial level, yes? But guys, there is another problem. You have this channel going on, right? So the price, if find a support here, it's pretty good. But normally what happens, the price tend to go around these support lines, channel support lines. Make sense? What I'm trying to say, that the price can always dip around these levels, guys, around these levels. Keep this in mind. So keep your mind open on this, guys. Remember, the price travels on tracks and it likes to test the track's resistance and support, guys. So be very careful on this. Okay, then what? This was the next candle formation, right? So guys, this candle form was a hammer, rightly said Isa. Isa, my question is, would you buy on this candlestick? Anyone? Why you wanna gonna buy this? This is the first bullish candlestick pattern on support, right? It could be an aggressive entry. What do you think? Guys, I said if you have a first bullish candlestick formation at support or resistance, right? You get bearish on resistance. Yes, you can take an aggressive entry, right? Aggressive entries without a breakout. Without a breakout. Aggressive entries without a breakout, guys. What do you think, guys? My question is why I should not buy on this candlestick when it's not even an aggressive entry. It doesn't fall into it. Guys, let me tell you what. See, this candle forms is a bullish reversal pattern, right? This candle formation is a bullish reversal pattern, but remember this bullish pattern, first of all, does not form right on the support, guys. It has to form here like this. Make sense? It has to form purely like this. So this forms, it is struggling. This pattern is struggling because see, this pattern fails to close above the high of the previous candlestick. Can you see this? Fails to close above the high of the previous candlestick. It's even closed below the previous candle high, low, right? It's struggling. It's a bullish candlestick. Bulls did came in, yes, but it's struggling. It's not definite. It's not a strong. It's pretty weak. And secondly, it's not on the support, guys. It's in between, right? So I would not be buying on this. Instead, I'll start watching this carefully. I know the buyers are started to enter into the market, but again, guys, they're not yet there. The entry is not yet there. Make sense, guys? Do you understand? Move on to the next candlestick. The next candle, inside bar, guys. Can you see this? Again, rejection. Yes. Fails to close below this candlestick, right? So let's say if I see this candle formation, what I'm going to do this. Guys, make sense? Spinning top, right? Yes. It's to close above it, right? Below this. That's this candlestick again, guys. What is these two candlesticks patterns, guys? What are these candlesticks patterns? Tweezers, that's right, tweezers. And remember, guys, based on this, I've used this trend line from this and this point. That's it. Make sense? Straight in. Okay, the next candle formation, guys, this. So the this candle formation, you might think that you might buy on this, right? Now you've got you got three candles formation. You've got three candles formation here, and likely is that you are very tempted to buy on this. Three inside bars, right, guys? Tweezers, bullish reversal pattern, hammer, bullish reversal pattern. This is inverted hammer, guys. Doji inverted hammer. Can you see this? This is a struggling doji inverted hammer, right? You will. It is very tempting right now, suggesting you can take a trade. And guys, a lot of traders would take a trade here. I can see, and even what I'm teaching, you might want to take a trade on these levels, right? Again, guys, let's consider the next candlestick. Hammer, right? Pure hammer. So for instance, let's say you took a trade on this. I'm showing you precisely if I was trading, let's say what I would have done. Okay, guys. Done? Are we happy on this, right? So let's say I took a trade on this. This is precisely I'll take a trade after these candle formation, because there's so many candlesticks, right? There's not purely bullish, right? But then again, they are okay. And remember, if you take a trade like this, remember the price can always go and test these levels, right? So the price can always go and test these levels. Let's consider this trade for a second. Okay, guys, I'm going to show you in a second. Just give me a sec. I'm going to show you. Okay, guys, I'm going to talk about how I'm going to manage this trade. It's a very classic example if I'm trading. Stay with me on this. So you open a trade, right? And then you see the market dip to the downside. Can you see this, guys?
Yes.
Okay, the market dipped to the downside. Now, guys, I'm going to show you exactly and precisely how you're using your stop losses, right? Just what the fuck was this? Okay, guys, see this. See this. We need a break. We need a follow-up candlestick. What did I say to you guys? We need a break and a follow-up candlestick, right? It means a level has been breached. Do you understand? A break and a follow-up candlestick, right? The level has been breached. Make sense, guys? Okay, great. Now you had this, so you open up a trade, the next candlestick was completely bearish, right? Bearish, engulfing, it engulfs the previous candle. Should you stay in the trade or exit your trade? Tell me. Would you stay in the trade or get out of the trade if you open a trade already? Stay in the trade. Okay, good.
Exit the trade.
Okay, guys, please do not speak. Let me mute you guys again. Give me a sec. Okay, we'll stay in the trade. Okay, what the next candlestick, guys? It reaches to the low side, right? It reaches to the downside. I'm going to show you precisely how I would have controlled this trade, guys. This breaches to the downside, yes? Can you see this candle breaches to the downside? Yes. My question is, would you have exited your trade or would you have stayed in your trade? Anyone? Guys, anyone? Exited, Jason. Jason, you're wrong. You shouldn't have exited your trade. No, Rudy, you're wrong, guys. Annan, you tell me, why would I stay in the trade? I'm teaching you how to precisely, you need to see the invalidation of a level to get out of the trade, right? Stay in the trade. I need to know the reason, guys. Come on, write down the reason. I'm watching you guys. Come on, write down the reason. Okay, the inside can still get down. Hammer. Okay, Jared, see, the price has breached. We enter after these candlestick. Tweezers, hammers, the first hammer, Second hammer, after the second hammer, we took a trade on, right? Now I'm discussing if you took a trade and this happened on your charts, where would you exited the trade? My question is, I'm going to precisely come to this because I did took this trade. I didn't get out of the trade. It's pretty easy. Why? I'm going to show you in a minute. I'm going to show you in a second. But guys, whoever finishes my training course should know why I'm not exiting this trade. Anyone?
No,
Okay,
no follow-up candle.
No follow-up
true
candle. Who is this?
Jared.
Jared, yes, see, this is why he's the one of the best. No follow-up candlestick, guys. The price has breached this level, right? The price has breached this level, yes? Right? Price has breached. We want to see the follow-up candlestick for invalidation. The next candle, what happened in the next candlestick? So if the price has breached, what would I have done? Straight away, this is the low now, right? Now, I want to see, what I want to see this, guys. Precisely, I want to see this. A break and a follow-up candlestick closing below this candlestick, guys. Simple. Make sense? Okay, guys, the next candlestick, what happened to the next candle? The next candle suddenly spikes to the upside. And what is this candlestick formation? What is the name of this candlestick formation, guys? Inverted hammer. Precisely. It is an inverted hammer stick. I'll stay in the trade. What about the next candlestick? It's a hammer again, guys. It closes above the previous candlestick. You should stay in the trade. Again, the next candle came back, test the low of the previous candlestick, right? You stay in the trade. Again, guys, tweezers. These are tweezers. We stay in the trade. This is inverted hammer. We stay in the trade, right? And then also use your support and resistance, guys. See this. You need to use this. Then the price breaches the first bullish candle. This is the bullish candlestick. The next breaches, right? You stay in the trade. The next candlestick forms hammer, right? It further adds on, will stay in the trade. The next candlestick, inverted hammer, right? On the support level, yes? Stay in the trade. The next candlestick, stay in the trade, right? 3 rejections. Can you see these pin bars, right? Rejecting from the support level. You bloody stay in the trade. Next candlestick, what happened? Stay in the trade, guys. Then what happened? Should you get out of the trade on the next candlestick? You stay in the trade again, right? Reference line. Guys, this is the key. If this breaches, get out of the trade. But again, you can get out of the trade earlier. Let's observe the candlesticks here. You can go to H1, and enter. I'm going to show you in a second H1. But again, guys, your reference chart is H4. So every 4 hours candle close, it's something you will be monitoring and observing to decide either you want to stay in the trade or want to exit the trade. Make sense? Regardless, your entry is on 15 minutes, 5 minutes, or 1 minute time frame. Make sense? Because this is the reference chart for us. Make sense, guys? Okay, engulfing, then hammer. Next, another hammer, inside bar, right? Then what is this? Next candlestick closing above the previous candlestick, inverted hammer. Stay in the trade, guys. Then what about this? Okay, guys, if I see this realistically, I'll suggest get out of the trade. Again, guys, if you're intraday trader, two wicks like this, you might want to get out of the trade. But again, guys, by the strict rules that I taught you guys, for as far as the candlesticks are concerned, you might want to stay in the trade because these candlesticks fails to close below, right? What you need to do is this. See this, right? You need to you want to see a break of this to get out of the trade, guys. Play with the support and resistance levels, trend lines, play with them, build your trade. You can swing this. Again, guys, next candlestick, what is this? Engulfing candlestick. Should you stay in the trade or exited your trade? Stay in the trade. Okay, stay in the trade. And then you had this harami. Then you had this hanging man, right? Then you have these. So all these candlestick, well, that is where I'll decide, let me get out of the trade, guys. Make sense? Guys, make sense, right? Now, if you had Fibonacci retracement, okay, give me a sec. Where's Fibonacci retracement? If you had Fibonacci retracement, guys, then this is what level, guys? 61.8 Fibonacci, guys. Can you see this, right? Make sense, guys? Do you understand this? So that is where you have exited your trade, guys. So do you understand precisely this trade is how much, what is the risk and reward ratio on this trade, guys? It is like 6-1 or something, right? It is 6-1 or something, right? We followed the price action from this level, right? And we analyzed each candlestick before we took a trade. And again, guys, when we took a trade, things went against us slightly here. Things went against turbulence here. But yes, we stay in the trade because we have the faith in our analysis. Makes sense? It is the faith what matters. And guys, you need to stick with your analysis. You need to stick with your analysis regardless whatever happens. If we had a follow-up candlestick, we would have gone out of the trade regardless, and I would look for another opportunity. But guys, remember something. If you follow the method that I'm teaching, which is based on pure price action, nature of the price action, right, then you will always be a profitable trader at the end of the day. All you need is 1 or 2 trades, winning trades, guys. Make sense? Say yes if it makes sense, guys, because this is the only example that I decided to give you today, and I'm going to end this session in a minute, right? But I'll take your questions. But please explain me if you understand precisely. This was not an easy trade to take. We took a trade. This first candle formation, hammer below the close of low of the previous candlestick wasn't a good one. Then again, the next tweezers was pretty weak. Regardless, it's a bullish reversal pattern, was a weak pattern, right? Hammer, yes, this hammer, that is where it induces me to take a trade, guys. But then things went pretty wrong. You had this closing below the high the previous candlestick, but then you had this breakout, guys. This was the breakout. I needed a follow-up candles to get out of the trade, guys. It never happens. So it wasn't an easy trading opportunity, and many of you guys would have exited your trade here, right? And missed this opportunity. You could have exited your trade here and might have entered again here, guys. So yes, even if you had exited your trade, you've been a conservative trader, it's fine, it doesn't matter. But you need to get onto the trade again after this candle formation. Break, bullish reversal candlestick, the next candlestick you get in the trade again, right? You took a trade, and again, guys, I'll show you more trading opportunity. This was another trading opportunity, guys. Make sense? So you had the trading opportunity here, inverted hammer, guys, and then you have these tweezers hammers. So guys, please confirm if you completely understand this example. Please confirm before I stop the recording, guys, and I'll take your questions. Everybody understand? Everyone? Guys, do you enjoy this? Do you enjoy this example? It was a pretty difficult trade, I say, if I was trading live. Okay, what is follow-up candlestick, guys? This is what follow-up. If you have a breakout, right, and you're in a short trade, let's say you're in a short trade here. Let's say this is your trade. You took a trade here. This is your trade. And guys, the price spikes to the upside and it reaches the level, right? You do not exit your trade. You want to see a breakout and the retest. And in the retest, you want to see a follow-up candlestick which closes above the low high of the previous candlestick in the buying, in the sell trade, and closes below the low of the previous candlestick in the buying trade, guys. Make sense? Yes, that's right. That's right. And again, I said, if you was taking a trade here, you should know there's always a possibility. The price can always go and test around these levels, right? The price can always dip. Price can always dip to kiss these support levels before it rises, guys. Make sense? So you need to keep all these factors in mind, guys. Remember, follow-up candlestick is one of the most important candlesticks. Okay, guys, that is the end of the session. I hope you enjoyed this. I'll take your questions, answers. Just give me a second. Let me stop the recording, guys. Give me a sec. Thank you very much for joining in. We will have another session tomorrow, 3 o'clock again, guys. Thank you very much.